Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olswich, the head of research at Valkyrie, and let's take a look at the midweek market update. So tomorrow there is a Fed meeting, FOMC, where the head of the Fed, Jerome Powell, is expected to announce a rate hike of 75 basis points. For the most part, that appears to be priced in. What remains a question mark is whether or not, as this Yahoo Finance article states, we will see groundwork for stepping down, whether or not we see forward guidance around December or February, whether or not we see language discussing terminal rates around 5%, plus or minus, whether or not we see language around the inflation target being adjusted from 2% to above 2%. Then lastly, the thing that I think a lot of people are looking for is what is the Fed looking at to make their decisions other than CPI, inflation, or unemployment. They're going to talk about PCE, which just came out recently, but the next CPI print isn't until the 10th. We also have jobs numbers at the end of the week, unemployment, as well as NFP. So there's a lot of market data, economic data still coming in the pipe. And then next month, December, we have a meeting and CPI both on the 13th of December. On top of all of that, we also have midterms in the US on the 8th. So there are plenty of opportunities for market volatility in the upcoming week or two here. The market investors, I think, generally this entire year have been more optimistic than reality. So if Jay Powell comes out tomorrow and says, we're going to continue the course, it's going to be 75s till the end of time or thereabouts, the market will get angry and upset at that. But if, again, as is suspected, there will be language about reducing the pace here, not a pivot. A pivot would be cutting versus adding, right? We're still continuing our rate hikes here. But so there's a lot of game theory around all of that, right? And all of the back half of this video, this analysis in regards to technical analysis, is sort of at the mercy of what the result of that meeting. And, you can look at this Market Watch economic calendar. You can see all this other stuff that I haven't even mentioned that's coming as well that may or may not have an impact. But realistically, the press conference, 2:30, the announcement, I mean, we may see plus or minus 10, 15% volatility on high cap BTC ETH between the announcement and then the press conference, depending on language between the two, right? Here's NFP on Friday along with unemployment. So depending on whether you're taking a near-term aggressive approach or you're taking a more risk-off approach going into this meeting, a longer-term approach, this will certainly have an effect. I think the most impactful conversation, if it occurs, is around that 2% inflation target and if that will come up from 2% to 3 or 4%. Something else that's happening this week, Bank of England on the 3rd also has a decision for rate hikes. And I think this is important because if US Central Bank decides to ease the hikes and the Bank of England continues their hiking, ECB continues their hiking, we may see fundamental reasons why something like the DXY has a reversal. Now it's been set up for the past couple weeks based on technicals for a potential reversal here, based on the double top pattern, M for murder, as they say, or in this case specifically an Adam and Eve double top. And should this actually reverse, historically we have seen inverse correlations with digital assets. So this would also be helpful for digital assets. Something else interesting that happened over the past week, if you look at the slew of stay-at-home stocks, the slew of tech stocks against something like Bitcoin, even add gold onto that in the mix here, since COVID, and you can adjust this, I guess, at your leisure, at your will, but no matter how you try to curve fit this or make Bitcoin look less attractive, if we're talking about since 2020, since the COVID lows, Bitcoin remains ahead of the entire pack relative to what's happened since March 2020, which is certainly interesting to think about when we look at who's left as an investor from 2021 to now. Is this a decoupling? Is this an attitude shift from FOMO, euphoria, risk on to a more balanced approach going forward? that remains to be seen, obviously. But it is an interesting sign that Bitcoin, Ethereum, many other digital assets did not follow the rest of the market lower. Historically, over the past couple of years, Bitcoin especially has been lumped in with the NASDAQ. And it certainly looks as though we're bucking that trend, breaking away from those correlations ever so slowly. So ultimately, in the near term, it's up to the Fed. What is the Fed going to do into 2023? If we zoom out, though, Bitcoin, we look at the technicals, we can look at something like the 2-year moving average, the 730 moving average. 5 times that, we get this range. I'm backtesting. Does it look good? Sure. You could pick any numbers you want. The point is here, if the past is helpful to the present, and we have a similar cycle, we are showing similar oversold conditions as we did in 2019, 2018, as we did in 2015. And are any one of these data points screaming momentum reversal, screaming on a technical basis that we're headed higher? Not really. Neither were they, honestly, in 2015. I was there, and they really weren't in 2019 until the very end of this chart pattern, as well as this Wyckoff-ian accumulation at the bottom here. So we're still in that fact-finding process, trying to figure out what this might be, what this could be. But if we look just at the moving averages, things look decently okay when we're talking about oversold signals on a relative basis. Something else we can look at is the power law corridor. This is a line of best fit based on the previous 3 all-time highs. And if we look at where those bear markets landed, again, we're in a similar situation in that we are in the bottom of this channel for risk against reward. So my read is we certainly look closer to a bottom down here than to a top based on these macro cycles we've had historically, these 4-year cycles in and around halving historically. That could change, that could be different. This entire model could certainly blow up in our face. But if in 6, 12, 18 months from now, I look back at something like this and I say, okay, we are at a decent place based on things like 2-year moving average and power law corridor. We can also add on to this volatility squeeze that we're currently in and looking at specifically the 20-week moving average. So if we add Bollinger Bands to this, we get 2 standard deviations above and below the 20-week moving average. Again, historically, the trend decider, the litmus test, really has been the 20-week moving average. So as this volatility squeeze occurs, we do not want to see price below the 20-week moving average as we did for many weeks in 2018. What we really want to see, and what we're seeing on ETH, Binance, a few others, prices starting to get back above that 20-week moving average for the first time in many, many months. So what I'd love to see from Bitcoin specifically in the next couple of weeks is a continued volatility squeeze. Again, there's more articles about Bitcoin's boring. Is anybody here? Lots of apathy. Certainly heard that at 2015 lows, 2018 lows. But you really do need, historically, these multi-month ranges to help form a potential bottom and wash out the bearish sentiment. Alternatively, if we do get lower lows, within the cards is this 10 to 13K level, because historically that's where drawdowns have drawn down to, right? We've gone down 85% in both of the previous all-time highs. So that would not be out of the question this cycle. So as we stand here now, we're more in the neutral zone. Again, we're sort of waiting for what the Fed's going to do. And that's showing up in technicals. We're doing a bunch of nothing, right? We're just sideways here, waiting for something to happen, waiting for a catalyst. And another thing on Bitcoin, with this downward channel that we're currently trying to do our best to fight out of, we've reclaimed the 2017 all-time high area. It looks as though we're trying to invalidate this downward channel. We're still below the 200-week moving average, still below the 200-day moving average. We're setting up for a 200-200 cross here on the 200-day and 200-week, potentially setting up for a doubly double bottom opposed to the M on Dixie. This would be an Adam and Eve. So we're not quite there yet, right? This isn't quite reversal territory, but it is a good sign that we've stopped making lower lows. At the very least, we can check that box off at the moment, right? Something else to watch for here trend-wise is the cloud, which is in the background here. We're still below the daily cloud. So ideally, in my bullish checklist, I want to be above all of these moving averages. I want to be above the cloud. I want to make a higher high above 25,000. That would be the goal for bullish momentum for many people, I think, based on this confluence of TA at around 25,000. We are seeing a slight uptick in on-chain activity. For the most part, it's just been flat. We are seeing BTC continue to leave exchanges, although I'm not too reliant on on-chain activity here because, again, it's up to the Fed. What is the Fed going to do? They've certainly helped lead us down, and they may help us return some momentum here on the other side. Flipping gears to ETH, ETH has continued to show a reduction in issuance since the merge in September. This is a graph of issuance since the merge in September. And ETH has a burning mechanism based on fees. That's sort of complicated, I won't get into on the video, but if significant on-chain activity continues with ETH, this will get pushed into deflationary territory. And if you compare that to ETH before the merge and after the merge, and you compare it against Bitcoin, although Bitcoin is only 1.7% issuance per year, on a relative basis, you would expect some strength here just based on this alone for ETH relative to BTC, which I think we're about to see on the ETH-BTC pair. Now, if we look at ETH in comparison to BTC, just on technicals, again, we're starting to see momentum shift from making continuous lower lows to establishing a range and starting to peak above moving averages, invalidating this downward pitchfork, starting to mean revert nearly back to that 200-day moving average. There's also a lot of volume congestion in this area that ETH is starting to peak above as well. So from a trend perspective, ETH does look like it's turning the corner here, especially relative to Bitcoin. Then we look at that chart on the ETH-BTC pair, and you could argue things like inverted head and shoulders, things like bullish bearish pennant if you zoom way out, right? We aren't printing these massive spikes. We aren't printing these massive inverted dragonfly shooting star type candlesticks. We're not printing, here's that Adam and Eve or M fractal again. We aren't printing that. We are printing continuing knocks on this door at 0.08. And if you measure this range, higher highs push towards that 0.12 region, which is certainly reasonable based on previous all-time highs. On top of that, you've got prices above the cloud and have sustained above the cloud largely for a year, recaptured the cloud recently, and you also have this TK cross, which you can't really see very well, but the cloud's way of hinting at momentum shifting here. So this doesn't get exciting until it's above 0.09. Realistically, that would be a multi-year high, but this does look like an excellent setup for an attempt at higher highs. Now that would be a different story if we were below the cloud, if we were below moving averages, right? This is the weekly chart. So there's a lot of data here in here since 2017, and there's certainly an expectation that this has a chance to move higher relative to BTC. Some other pairs also doing well. Binance, again, above trend metrics where you'd want to see it above. To me, this is Bitcoin's 25K equivalent. It is back at that level. Now it may continue to sort of make higher lows here over the next month. It may break above, right? But one thing it doesn't look like it's going to do in the near term is suddenly shift lower and break below the June lows, right? This, based on technicals, looks like it's setting up for a trend reversal, more so than BTC, more so than ETH. Very strong showing from BNB recently, and it even hit an all-time high against BTC on the BNB BTC pair. So there are some interesting relative trades to be made, even in this broadly bearish environment for digital assets. And it's also interesting that, again, if you measure this range, much like I did for ETH with Fibonacci extensions, we are in that range currently on this pair, this trade. And lastly, I'll just mention another chart that looks similar to many other charts, and that's Link USD. Again, we want to see this multi-month range very quiet on a relative basis. You don't have range expansion. You don't have continuous lower lows. You have an attempt at buyers and sellers coming to an equilibrium over multiple months. And that is the type of thing you look for just broadly on any chart, any market, on a technical basis if we're looking for potentials in trend reversal. That's all I have for this one today. And I'll just add that this video is this video is for information purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.